Hey everyone and welcome. Today we're going to do something super useful. We're going to dive deep into your payslip and uncover all the parts of your salary that are actually, believe it or not, completely tax-free. Ready to find out how much more you can keep?
You know that feeling, right? You get your payslip, you see that big, exciting gross salary number, and then your eyes drift down to the number that actually hits your bank account. And it can be a little stressful seeing all those deductions. It's a feeling we all know too well.
But here's the good news. What if I told you there are parts of your salary that the taxman simply can't touch? It's true. So let's go find these hidden gems in your compensation package.
All right, first up, let's talk about the daily perks. These are the little things that can really sweeten your work life and, more importantly, your bank account, because they're tax-free.
So think about your typical day at work. If your company gives you a car just for official use or covers your travel expenses, that's tax-exempt. What about lunch? Free meals or those food coupons you get? Yep, tax-exempt. Even your phone and internet bills can be tax-free if your employer is reimbursing you because you need them for work.
And here's a fun one. Gifts. You know, those gift vouchers or presents your company gives you for special occasions? Well, those are tax-free up to 5,000 rupees a year. It's a small thing, but hey, it's a nice little bonus.
Okay, this next one is a big deal for your future. If your employer is contributing to your National Pension System account, or NPS, that contribution is tax-exempt up to 14% of your salary. This is just a fantastic, tax-efficient way to give your retirement savings a major boost.
Okay, so let's shift gears from the daily stuff to the really big payouts, retirement benefits. We're talking about those larger, one-time payments you get when you leave a job, either through resignation or retirement.
First up, let's talk about Gratuity. What is it? You can think of it as a sort of loyalty bonus, a thank you payment from your employer for all your years of service. But the big question is, how is it taxed?
Well, if you work in the private sector, your gratuity is tax-free up to a very generous 20 lakh rupees. And if you're a government employee, it's even better. The entire amount is completely tax-free.
All right, next on the list is leave encashment. This is exactly what it sounds like. It's your company paying you for all those earned vacation days that you, well, never took. Now, if you get this payment when you retire, it's tax-free up to a massive 25 lakh rupees. That's a huge tax-free boost to your retirement savings, for sure. You might have heard of something called a voluntary retirement scheme, or VRS. This is basically when a company offers employees a deal to opt for an early retirement, and in exchange, they get a one-time compensation package. So, if you decide to take a VRS, the compensation you get from your employer is tax-exempt up to a limit of 5 lakh rupees. And this is an incredibly important one to know. In the unfortunate event that an employee passes away while they're still in service, any gratuity or death benefit paid to their family is completely and fully tax-free. There's no upper limit on this at all.
Okay, I know that was a lot of information and some pretty big numbers, so let's do a quick fire round just to lock in those key figures you really want to remember.
First up, for private sector employees, remember that gratuity limit. It's a tax-free amount up to 20 lakh rupees. That's a huge reward for your long-term service. Next, when you're cashing in all those unused leave days at retirement, the tax-free limit is even higher. Remember this one, 25 lakh rupees. And finally, if you ever consider a voluntary retirement scheme, that compensation is tax-free up to 5 lakh. Just keep that number in your back pocket.
See, knowing about these tax-free components can be a total game changer for your financial planning. At the end of the day, it's not just about what you earn, it's about what you get to keep. So, now we want to hear from you. What financial topic should we break down in our next explainer? Let us know.